Hey Jack, how did the stock market do this week?
The stock market did horrible.
So there you have it, okay? That's the views of a 7-year-old. A 7-year-old, completely unrehearsed, completely unscripted, okay? He was essentially out there, he was watching the news with me just about on a daily basis, just seeing what's going on with the stock market. And the perception that he has is that the stock market is doing absolutely horrible or absolutely terrible and is basically crashing. Every single day you would have heard something on the news and you would have thought that, hey, I might be better off just getting out of this volatile market. I might be better off just keeping my money in cash. I might be better off just holding on to this, finding the appropriate investment opportunity, and then basically putting my money into the market at that point in time. Every single day you would have heard one of these types of news articles, okay? Some days you would have heard about how unsuccessful the AstraZeneca vaccine basically is. Other days you would have heard about the ship that's basically stuck in the Suez canal and is obstructing or limiting trade. Other days you would have heard about the inflation rates and how interest rates are basically coming down and essentially stabilizing a little bit. Other days you would have heard about the Fed chair as well as the Treasury Secretary providing their own points of views as it relates to unemployment and the overarching state of the economy, and everyone essentially having their fingers crossed, hoping that the bond markets basically react in the appropriate manner. Other days you would have heard about the value stocks now potentially getting overheated because of all this money that's basically moved from the NASDAQ and is moving into the Dow, i.e. value stock territory. You would have heard about that potentially getting overheated and people essentially needing to sell out of that market just so they can essentially lock in some of their profit. Still other days you would have heard about Norway, okay? So Norway's basically put some indications out there where they may potentially be raising their interest rates, and now there's all this concern, well, will all the other developing markets potentially start tracking Norway in terms of what it is that they're effectively doing from a monetary as well as from a fiscal stimulus perspective. So was it really all that bad? Okay, if we were to actually look at the numbers and actually look at the tape, was it as bad as people made it sound out to be? So let's look at some of the numbers. Well, overall, the Dow was up 1.5% this week. The S&P 500 was up by 1.3%, and the Treasury, 10-year Treasuries basically lost 1.65%. And if that's one view of basically looking at it, let's also compare some of these numbers to all-time highs. From an all-time high perspective, the NASDAQ is down about 7.3%, so it's technically not even in correction territory, and I'm defining correction as basically a 10% change in the market. And some of this declines was basically being the result of some of the stocks primarily related in the innovation space that were significantly overvalued, as well as some of these FANG stocks, which are also for all intents and purposes overvalued. And then there was also some incremental concern as it was related to the SEC basically including or demanding incremental requirements over a 3-year period for Chinese companies that are basically related on US stock exchanges. And even if you look at the Dow as well as the S&P, both of these particular indexes are already at all-time highs, and they continue to be so every day. Let's even get broader than that, okay? Let's just continue to expand out or zoom out, if you will, okay? So the Fed GDP growth expectations continues to be at 6.5%, and this was communicated basically last week, right? Daily vaccine doses are just about 3 million doses in the United States on a daily basis, okay? That is extremely good news, and this number continues to go up, and the president has basically put some more guidance out there in terms of what his 100-year goals are, so you can definitely look that up. The AstraZeneca vaccine, even though they had to reduce the efficacy rate by at least 2 or 3 percentage points, it is still a very, very productive vaccine for all intents and purposes. There's no meaningful move, at least in inflation either, okay? So you've got all of this alarming news that is coming out from the system or from the media outlets, as well as from various YouTube channels. But however, when you look at it from a net perspective, right, while there is a tremendous amount of volatility in the market on a day-to-day basis, the market continues to trend upwards. And it's one thing, right, depending on the source that you're looking at. It's one thing when it's coming from like YouTube, right, when it's coming from various people who are essentially trained in real estate, right, and now are basically considered to be stock market or investment or personal finance related pundits, right, and these folks have tremendous amount of followings, and this is what's creating a significant amount of volatility. But there's a whole other thing when you have like these media outlets that are essentially promoting a significant amount of issue as it relates to the stock market on a day-to-day basis, because these folks are supposed to be these perceived experts and providing some level of context in terms of where the market may potentially be headed. We're also hearing a ton of stuff from these economists, okay, and economists are kind of like changing their point of views just about on a daily basis as well. A lot of people have been promoting margin and options trading. A lot of people have been promoting these things, and these were fine, right, when the market was for all intents and purposes moving upwards. But obviously, as everyone knows, that this is not going to be a sustainable fact pattern. Just the other day, I was watching something on Meet Kevin, right, which is another massive YouTube channel, right, and he, for all intents and purposes, was talking about is what would happen in the event that he effectively gets margin called, okay, so his bailout strategy. What does this all mean? Well, before I tell you what it all means, right, definitely hit the like button for the YouTube algorithm and subscribe to the channel as well. Well, simply, the core thesis from an investment outlook perspective continues to remain status quo. Nothing has fundamentally changed in the market. Okay? Interest rates will slowly but surely continue to rise. Right? I know it went down a little bit this past week, but it's going to continue to slowly rise. Inflation will continue to have this slow but steady uptick. The federal chair has already talked about how when it hits around 2.3% or so, the federal government will basically react and start taking into account and put various measures into place so that inflation does not continue to go up. I mean, think about it from this perspective, okay? If you're a bondholder and you're generating 1.65 or 1.7% on the 10-year treasury, but then you're also having to deal with 2% inflation, that is not going to make any sense, right? There's no reason for a bondholder to basically hold US government bonds at that point in time, right? At a certain rate, the interest rates has to kind of cross the line of inflation for all intents and purposes and actually be productive for a bondholder to basically hold US bonds. The other thing to note is that the outlook for the economy continues to be very positive, okay? I took a vacation just this past week, and let me tell you, right, the theme parks were absolutely crowded, and this is even with COVID restrictions, okay? So it kind of poses a question on whether the market has properly, like, factored in the amount of potential that is in this whole reopening trade. And the other thing that we've talked about in other videos, right, the variability in the NASDAQ, right, as interest rates kind of basically fluctuate a little bit, continues to decline, right? So if you think about this as a form of a pendulum, if you will, right? When you have like these interest rate changes basically happening initially, the NASDAQ was swinging significantly based on the direction with which the 10-year treasuries were basically headed. But now, as you're seeing, right, there's a little bit of numbing that's happening in the market, and this pendulum is less and less swinging for all intents and purposes from where it was in the past, right? So which is definitely a good sign that people are sort of like absorbing this whole notion, and it's resulting in reduced volatility as it relates to the NASDAQ. But now, you know, with that said, I would expect the NASDAQ to continue to come down a little bit more because there has to be some level of price that is effectively being put in terms of addressing the significant overvaluation over a lot of the innovation and NASDAQ technology related stocks. Now, you know, if the NASDAQ more specifically drops over 10%, I would consider that to be in correction territory, right? And when you have something like that in correction territory, then it would be a good opportunity to potentially start looking at various technology related stocks to potentially invest in. There's opportunities that are currently there as well, right? But they're few and far between, but they will become more pronounced when the market continues to drop, at least for the NASDAQ, and it could be a nice way to basically engage or re-engage into the market. Now, one thing that I do agree with the experts on, right, is it may be an opportunity or timely to take some of the profits away from the Dow or the value related stocks. These things have had a significant amount of climb over the last 3, 4, 5 weeks, okay? So if you're in one of those positions, at least take off your initial investments and let the remainder of it run. And of course, if you're in this whole thing for the long haul, just disregard everything and continue to investing at a regular clip based on whatever your risk tolerance effectively is. The one other thing in terms of looking at some of the stocks that are out there, you know, one thing that I did find rather interesting is look at some of the home builder type of stocks, okay? There continues to be a significant amount of demand. People cannot find homes that they can effectively live in. So there is continued to be a significant amount of demand for homes, and home construction companies need to get on board and start building some more homes. A lot of these companies in this home building sector have very significantly low P to E ratios. Now, none of this is intended to be financial investment advice, okay? Just some some food for thought in terms of taking a step back and potentially putting your own hat into this, right? And thinking about, well, you're hearing about all this stuff on a daily basis from the news and from all these other sources, but does it actually matter in the long run? There may be some nibbles here and there that potentially have an impact, but for all intents and purposes, right, the market forces are too strong to dissuade some of this upward market bias that is potentially there in the marketplace. Now, if you enjoyed the contents of this video, definitely hit the like button, subscribe to the channel, ring the notification bell, and I'll see you soon.